Hi, welcome back to my channel. And this is our first week in review. So today is January 24th, 2021. This is for the week ending January 23rd, 2021. And we're going to take a look at our wheel strategy, take a look at the progress we've made with each of our stocks, and take a look at what the plan is going to be for the coming week. So let's pop over to our trade log. And this trade log I'll make available in the comment section of the video so you can take a look at the trades we make. You can follow along. This will be a running log of everything we do. And the first stock we're going to take a look at is Canopy Growth, or CGC. You can see on the 19th, or Tuesday, we sold one put. We collected 95 cents or $95 for the sale of that put. And the stock is 33.80. So we've got $2.80 before our strike gets hit, which means if it's above $31, we will expire worthless, or we'll probably buy it back at 80%. Because if we go back to our trading plan, you can see right here, we are going to close our short options at 80% of max profit. So in the case of our 95-cent put, we're going to buy it back around 20 cents, right? It's roughly 80%. So the next stock we have is Simple Gold, which is Barrick Gold. This is a Canadian gold miner. And you can see here we sold two puts. We sold two 22.50 January 29th puts, so they expire this coming Friday. Their strike is 22.50. The stock is currently 23.47, so about $1 more than our strike. And we have two different prices here. So you can see we got filled at 26 cents and 25 cents, or for 51 cents total. Or so we collected $51 for Barrick Gold. And Norwegian Cruise Lines is NCLH, our third stock. Again, we sold two puts, both of them at the 24 strike, collected 57 cents, so $113 for NCLH. So in total, we go back to our overall totals here, overall results. You can see that we collected a total of $259 for the put premium. If they expired worthless, our account would have a balance of $77.59, or a return on equity of $691. We're not going to collect all of that $259. Again, we go back to our plan. It says close at 80% of max profit. So 80% of $259, or about, say, $200 or $202 is what we're going to collect before we close those positions out. And when we do get closed out, we will sell another put. Now, in the case of NCLH, it's the closest to our strike price. So if it goes below our strike price by Friday, we will purchase the stock and then we'll sell calls against the stock. So, let me go back here. I was going to use Excel, decided against that. NCLH, Norwegian Cruise Lines, that would be a better stock to start with here. So let's update this so you can see what's going on. Norwegian Cruise Line Holdings. All right. So let's pop over to our brokerage. So let's go over here. And you can see I'm using the web interface for Tastyworks. Tastyworks is just happens to be the brokerage I picked for this. So you can see here, so our account, it says a net lick. of 76.12, which means if we sold our long, or if we bought back our puts, and we would end up with 76.12. So if you liquidated your account, net lick is what you would end up with. So um, we are about $112 more this week than we were last week when we started with $7,500. And then you can see here with CGC, we are at about our price, right? So it's the mark is $21. So that's where the where it is right now. So the natural's 23. We're trying to get 19 cents, so we're really close to closing out this put and buying that back. If we look at gold, we're trying to get 5 cents for buy those puts back for 5 cents. Or right now it's at 11, so that's close. NCLH, you can see we're trying to buy it back for 11 cents, but it's at 51. So NCLH really hasn't moved away from our strike. It's actually gotten closer to our strike. So um, the premium that you could get for that put really hasn't changed a lot. So we'll keep an eye on that. If we get to buy back the puts on CGC or gold, then we will turn around and sell another put. So that's what we'll be watching for this coming week is buying back those short puts and selling new short puts. Again, if we go back to our trading plan, the trading plan says we're going to sell with at least 5 days expiration, no more than 10. So if we get closed out this week before Friday on those puts, then we will go ahead and we'll sell new puts at the February 5th strike. So a week out. And we're going to sell at least 1% value and the 30 delta options. That's what we're trying to hit. So we go back to our account. Those two stocks are the ones that are probably going to have the activity that's we're going to watch. If by Friday we end up buying NCLH, that's fine. Then next week's video, we'll talk about the call we're going to buy and what strike we're going to target, that kind of thing. So that's our week of review for this week. We'll keep a close eye on CGC and gold. Probably get those puts bought back and resold. So keep an eye out for a new CGC and new gold video sometime this week when we have the opportunity to sell new puts. And again, as always, we're doing this for information and entertainment purposes only. I am not an investment professional, so I am not giving you investment advice. You are free to use this strategy. If you want to use the same stocks I do, that's fine, but do your own homework. You are making your investment decisions, and happy trading.